Good afternoon, everyone. Gabe Velazquez here with you, transparenttradesolutions.com on a Friday, 19th December. We're getting a little lift in the AI trade, basically coming off the bottom part of the trading range, which I've been discussing and writing about. Again, subscribe to the newsletter, give me a thumbs up. Let's get right into the charts here on a Friday. I'm doing this about half an hour before the market closes. And, it's been a back and forth, as you know. Today, we got a little lift from Oracle. Whole Nvidia's up. By the way, we did buy in our group here, we bought calls on Nvidia yesterday. We're doing pretty good with those today. Um, but we'll see. I mean, here's the chart of the S&P. You can see looks like we're headed back to the top end of the range. Uh, and likely, if the AI trade takes hold here, which I think it is, and getting into the seasonals here the last couple of weeks, thin trading. Obviously barring any major upset here or something, headlines, I think we probably at least get up to the top of the range. Wouldn't surprise me if we close near the high end of the range here or even all-time highs probably in the cards. Next year is going to be a whole different story. Obviously, we'll cross that bridge when we get to it, but that's kind of where we're at today. This is all driven by the usual suspects. Oracle's getting a little bit lift. By the way, all these stocks came off of pretty key support levels, and pretty much driving the indexes. If you take a look here at NVIDIA, you can see it held the support areas here, uh, pretty defined level of support, pretty much tracking the index. Obviously, if the S&P and the Nasdaq are going to head higher, we're going to have this continue breaking above maybe 183 and eventually, maybe heading up to 200 a share. Oracle is another one that's been kind of in the uh, doghouse lately, and it looks like it's lifting. It's got to also clear 200 a share to get some traction. Um, NASDAQ similarly, that's coming off the mat a little bit here. We have had um, these levels here on the NASDAQ now looks 25,800. That still has some catch up to do. As you know, that's been kind of the weaker uh, areas here of the market. So, uh, if this is the beginning of the catch up trade in the, we had this level right there actually was what held the NASDAQ. And clearly now we've got some resistance up here. So let's see if we have some follow through next week. Bitcoin can't get out the mat. That's still kind of range bound. And until it breaks above 95K, I would say it's still pretty much tentative and not a lot of conviction there as well. We have a little bit of a broadening looking at the RSP uh, with today's action. VIX looks like it's headed back towards 14 and a half and maybe even lower. But again, if it comes down this low, it may, we'll talk about as we get towards the end of the year, some thoughts here. Yields basically just now trapped in a tight range here between 410, 420. We'll see if that changes. Dollar similarly kind of just churning here. It's starting to bounce a little bit. So, the big mover last night was Japanese yen as it they hiked rates to 18-year highs. There's some other major implications here to the Japanese yen, which obviously are beyond the scope of what I want to discuss here. I'll probably write about it this weekend, so subscribe to the newsletter. Some of the implications. We are coming into some really key levels in the long-term Japanese yen. I would go out as long as, the monthly to kind of give you a sense as to how important that uh, 161 level is on the Japanese yen. Uh, let me take these out of here. So this is going to be really key here, this blue line, this 161, let's call it 160. This is going out to like the 80s. Now, again, you say, well, what the heck is he talking about? But I mean, if you think about a breakout above this area here with respect to the Japanese, people don't realize the Japanese yen was at 200 back in 1985. So, we haven't seen these type of areas in the yen for literally, what is it, 30 plus years. This is when I came in the business, by the way, in 87. So it's been very fascinating. We'll see. We'll see if there's anything changing here. Again, a lot of changes in the Japanese economy. And by the way, just a couple quick notes. Japanese are the biggest bondholders of U.S. Treasuries, so you can think about that. And if their rates are coming up, would they basically be selling our bonds and going into their JGB? That's something to think about, and what the implications are for our interest rate markets. Um, and I think that's partly tied into why gold continues to make new highs, silver, all the metals. So it's kind of, if you think about it, it's kind of tied together. We'll see if gold actually looks like it may want to break to another new high. Silver's just been on a tear, as everybody knows. How far it's going to go, uh, nobody knows really. And there really is no let up here. There's no reversal patterns, and it's kind of just feeding on itself. Uh, so until further notice, you kind of just let it. Obviously, you don't want to be the last one in when it does break. But still, even pullbacks, every pullback here, this is if you look at uptrend up in the dictionary, in the technical dictionary, this is a classic uptrend. And, it goes through, this market has gone through periods like that. Then it goes through the digestion phase, but how long it's going to last, nobody knows. So for now, buying pullbacks until it doesn't work is still obviously the way to go. Oil still just hanging around here. It couldn't break 55. They're still it's still vulnerable to breaking 55. We'll see. And then nat gas just chopping around back and forth. Looks like it wants to hold around the 4 MBTU again. And if it does hold, question will become, we going to run back? I mean, just a mere 2 weeks ago, we were at 550. So, it's just been extremely volatile. I think we had to break above 425 and maybe make a run up to this gap, which is probably in play. So I think now we're at a very critical spot here. We have to hold 4 MBTU in the next couple of weeks. If we can't hold on to that, then we may go lower in nat gas, but we'll have to see what happens there. So all in all, we got a thin market trade. This is, ends the last full trading session for the year. Next week, as we know, we've got Christmas, half day on Wednesday, Christmas Eve, and then a full day, incidentally, on Friday, Christmas, the day after Christmas, which would be interesting. Very, very thin volume. Then the following week, we got New Year's and so forth, New Year's Eve. So, I would say thin trading could exacerbate the moves, could exaggerate the moves, let's call it, because of the thin market conditions. Still, markets are going to trade. Still, there'll be opportunities. So, if you're going to be long or having positions still left on over the next 2 weeks, you still got to monitor those. And I still believe there's going to be some movement. So I wouldn't just be too complacent on that. In any event, have a great weekend, and we'll talk to you on Tuesday again. Subscribe to the newsletter, give me a thumbs up, and we'll see you next week. Take care.